investing that it's quite different. Okay, so as a trader, we look to add to positions at each subsequent high or low, and we look to take gains off the table and tighten up our stop criteria after new highs are established with an ensuing pullback, while at the same time not looking to short stocks. Market stops going down, starts to go back up again. We look to add to our existing positions or add new positions to our portfolio. Now, I don't have a chart of a downtrend, but just completely flip that over on its head, and that's the plan of attack in a downtrend. And a lot of you guys don't short stocks, so it kind of turns people off or discourages people when I talk about shorting. But let me just follow my mouse, follow my cursor. In a downtrend, this is what it looks like: lower highs and lower lows, lower highs and lower lows. So what do we do? We look to short positions at each subsequent lower high and look to cover those short positions or take our gains off the table after each subsequent lower low, while not looking to buy stocks during those rallies. Why? Because those rallies are rather short-lived. Remember, you're in a downtrend. Okay, so you're just flipping the approach on its head in a down market. That was a trending market. All right. This is a trader's market. Now, this is the beginning of most of 2018, actually, into the summer of last year. Okay, the market no longer hits higher highs. However, it doesn't hit lower lows either. In other words, kind of trades in a channel, bouncing back and forth between support and resistance. Okay? Again, this is an investor's nightmare. Imagine the average investor buying and holding or using looser money management rules. What are they thinking during this market? They're thinking, I'm not making any money. Well, I do make money, and then I give it all back. And then I make a little bit more, and then I give it all back. And then I'm back to where I was back here, and then I'm giving it back again. So they're not really making money and growing their portfolio in a trader's market. The trader, on the other hand, is enjoying this. They'll take gains off of resistance retracement. They'll look to buy off of a support retracement. They'll buy again off another support retracement. They'll look to take gains off the table and potentially short stocks off of a resistance retracement. Okay, so they're buying and selling based on the bounces back off of support and resistance. Then there are markets like we saw at the end of 2018 where the market hits extremely oversold levels. Okay, within VectorVest, we have two indicators to help us identify extremely oversold markets and markets that are really itching to rally. Okay, those indicators are the MTI and the buy to sell ratio. So historically, when we've seen the MTI go below 0.60, it's on a 0 to 2 scale. Above 1 is good, below 1 is bad. When the MTI is below 0.60 and the buy to sell ratio goes below 0.20, we know that we're in an extremely oversold situation and a rally is imminent. Now, we don't just buy stocks because the indicators are below those levels. We wait for the rally. See that big green candle here? That was the rally. That's what we wait for. Okay? And there is an indicator. There is a technical indicator that's best used in this type of market situation. All right, so let's get some input here. What did you learn, notice, or want to share with the group? What did you learn, notice, or want to share with the group? I'll give you guys a few more seconds here. I'm going to take a quick drink. What did you learn, notice, or want to share with the group? William says, I've learned that I still have a whole lot to learn. All right, well, we're just getting started here. So, okay, well, that's good. Al is asking, do you have settings at tops? Yes. When the MTI goes above 1.5, 1.6, there's no top level for the buy to sell ratio. But the market we consider a little bit overbought when the MTI gets to anywhere between 1.5 and 1.6. Mahesh says trade with the market. Good, I like that. Bruce and Long say new indicators of the MTI and the buy to sell ratio. Long says MTI buy to sell ratio. Michael says that you can trade any market. You can trade any market. Some are easier than others, right? A trending market is easier. Frank, I like this one. Frank says you have to change trading techniques as the market changes. Bingo. That's kind of where I was getting at, and hope somebody kind of picked that out. And I'll explain exactly what that means here in a moment. All right. So now that we understand a little bit better how to identify the different types of markets that there are, next you need to understand which indicator to use in each of those three markets that I've just talked about. Okay? So in a trending market where the market hits higher highs and higher lows, the MACD stands for moving average convergence divergence, is the ideal indicator to use. Notice the first two words in that indicator, moving average. MACD is a moving average based indicator. So, and if you guys know anything about moving averages are trend indicators. They identify trends. So, wow, what a novel approach, right? Let me use a trend based indicator in a trending market. There we go. Okay? In a trader's market, we know what that looks like, right? Where it bounces back and forth, up and down between support and resistance. Well, there's a technical indicator to help you find stocks that are doing the same thing. Retracing from support, retracing from resistance. And then my favorite indicator is called stochastics. It identifies extremely overbought or oversold price situations. So when the next time you see that the MTI goes below 0.60 and the buy to sell ratio goes below 0.20, and you watch our daily color guard reports every night and our timing section every Friday, and we're telling you to get ready to enter into the market, get ready to buy stocks again. And then when the market does rally off of those extremely oversold levels, we tell you, here it is, here's the rally, start taking advantage of it. The stochastics oscillator is the ideal indicator to use. All right, so let's talk about the MACD first. Whoops. We're looking at Netflix. Now, don't worry about the time frame that I'm using here. It's basically 2017, 2018. Don't worry about the time frame. It's what this stock chart looks like that I want you to pay attention to and really kind of take a snapshot of it in your head. It goes from bottom left to upper right. Nice trending stock, right? Higher highs, higher lows. You can draw a line connecting those lows. All right, higher highs and higher lows. So the MACD is the best indicator to use in this type of a stock. So let's talk about the MACD quick. Very easy, guys. The MACD is at the bottom of the chart. And what we look for is we look for times when the MACD histogram, that's these yellow bars here, when the histogram goes from below zero to above zero. Almost got a horizontal zero line here, identifying a bullish and a bearish situation. So when the indicator goes, when the histogram goes from below zero to above zero, you buy. When the histogram goes from above zero to below zero, you sell. In an uptrending stock, what did we say about what to do in an uptrending market after each subsequent higher high? We said to tighten up your stops, take gains off the table, but don't short. So in an uptrending stock, I'm not going to look to short when the histogram goes from above zero to below zero. I'm just going to take my long gain off the table and wait for another buying opportunity. Okay, and as you can see here, July of 2017, MACD histogram bars were negative for quite some time. The stock was falling. It stopped going down, started to go back up just because it's stopped going down and started to go back up. Doesn't mean we buy it. We buy it because the indicator tells us to buy it. All right, so we get back in. Did we have an opportunity for some gains? Absolutely. After the subsequent higher high, the MACD the stock pulls back, histogram bar goes negative, we take our gain off the table, we wait for another buying opportunity. Another higher low was established. All right, so we got a nice uptrend. Higher high, higher low, stock stops going down, starts to go back up, we get back in. Here maybe we walked away even. All right, so here where we entered off of this bullish MACD crossover, right in this area here, we exited right here. So we took gain off the table there. We kind of sat out for maybe a couple of weeks. We get back in because the histogram bars turn positive, and then they turn negative about a week or two later. Maybe we walk away with an even trade here. But notice we're not walking away with a large loss. Okay. MACD histogram bars. Look at how long it stayed. The bars stayed below zero there. Right? What is that telling you? Telling you not to buy it yet. It's telling you not to be in the trade yet. We wait for the histogram bars to go above zero, and it did so there, giving us a really nice opportunity for some profit potential. Same thing here in February of 2018. All right. Now I'm just showing you guys more and more examples here. Here was another one where maybe we walked away even. So there was another higher high. See, nice uptrending stock. Higher high. MACD histogram bars turn negative. We exit our long position. We get back in. And maybe we walk away even here as well, but we should never see large losses. And I can't put a number on it in terms of a percentage loss. It just depends on, where you get in and where the crossover occurs and where the negative crossover occurs. Okay? But there's always going to be another opportunity. Again, what are we still seeing? We're still seeing a nice uptrend, right? Higher lows, higher highs. And that trade would have worked out. And that trade would have worked out. Another higher low. Another higher high is established, and then there we go. Right? The chart goes from bottom left to upper right. That's what we want to see. Same stock. Let me show you the difference now in a downtrending stock. Okay? The difference in long position entries. So here, November 2018, November 6, 2018. Look, you had a bullish MACD crossover, right? But what is the stock doing now? Is it in an uptrend or is it in a downtrend? Well, it's clearly in a downtrend, no longer in an uptrend. We're looking at lower highs and lower lows. So in that type of market, what did I say earlier about your kind of approach, right? We're not looking to buy these rallies in a downtrend. Why? Look at what happens. They're really short-lived. Another one, you think you're going to be the one, right? You're going to get that lowest price possible and the stock's going to go up 50% from there. You're in a downtrend. I said earlier that we're trying to put the probability of a successful trade in our favor, and you're not doing that if you're buying a MACD bullish crossover during a downtrend. What I would rather do is I'd rather short. Use the bearish crossovers to short in a downtrend. So when this stock no longer hit a higher high here, and the MACD histogram bar went negative, I'm going to look to short that position. I'm going to stay short until the histogram bars go positive, and then I'm going to cover my short position and look for another re-entry back into the short position. Okay? So the first two words in that indicator are moving average. Moving averages are trend indicators. It's best used. MACD is best used in a trending market. And let me say this. The MACD will fail you. It will fail you in a non-trending market similar to what we're looking at right now. Okay? Here we're looking at a stock that's right. What is it doing? It's not trending anymore. It's trading, right? It's bouncing back and forth between support and resistance for 5-6 months or so here. So if you try to use the MACD in this type of a market or this type of a stock, when a stock's behaving this way, it's not going to work as well. You may get winning trades. You are more likely to have more losing trades than winning trades. Okay. So before I get too deep, let's talk about what support and resistance is. First, let's talk about support. Support is basically a level where the stock price stops going down and it begins to go back up. Typically, it does that multiple times. And it's not necessarily a specific price, more so a zone. And support is where demand is deemed strong enough to support the stock from falling any further. Resistance is the ceiling. It's a level where stock prices stop going up and they start to come back down, again, typically multiple times. It's where supply is deemed strong enough to resist the price of the stock from rising any further. Okay? And it's the ultimate crowd mentality indicator. So if you think of it this way, let's look back here in May and June, July of 2018. So let's say you buy the stock, right? You buy it and it goes up. Stock goes up, you're feeling great, but you don't sell it. Why don't you sell it? Because you think it's going to continue to go up, right? And then what happens? Comes crashing back down and you say, man, all right, I weathered the storm. It's starting to settle down. All right, I'm okay. If it ever gets back up there again, what do you say to yourself? You say, well, if it ever gets back up there again, I'll sell it this time, right? Then what happens? Stock gets to that level again, and all the people along with you who bought it back here the first time, what do? They sell it. What does that do? That puts tremendous downward pressure on the stock's price, and it's going to fall. And typically, it'll fall to at least the next support level. All right? So how do you use support and resistance in your trading? All right, so there are two situations for each. There are two situations that you will see and react to at support, and there are two situations that you will see and react to at resistance. Let's talk about support. There's a buying opportunity. There's one buying opportunity at support, and it's when price retraces from support. So if you see price hitting support and then retracing from it, hitting support and then retracing from it, that's a buying opportunity. Okay? Typically, price is going to continue to go up until at least the next resistance level. The other buying opportunity is if you see price breaking through resistance. So I'm talking about the two buying opportunities now. The first buying opportunity is when price retraces from support. The next buying opportunity is if price breaks through resistance. Remember, what did we say? We said that there was built-in selling pressure at those at that resistance level based on the crowd mentality. Well, if buyers are able to overcome that selling pressure and push the stock's price through and up through resistance, that's very bullish, and that's a buying opportunity as well. Okay, so buying opportunities, price retracing from support or breaking resistance. There are two opportunities that you'll see to help you exit long positions or to initiate a short position. And the first one is if you see price retracing from resistance. Retracing from resistance. That's an indication to either open or initiate a short position or to take your gain off the table on the long position that you took off of the support retracement. The other bearish situation, and we don't really see this on the chart, but if you see price breaking down through support, breaking down through that floor, that's bearish, and that's an indication to sell an existing position, long position, or to initiate a short position. Okay, so again, the MACD will not work as well in this type of a stock, this type of stock behavior. You should apply an indicator like support and resistance when you see price bouncing back and forth between the same levels. And the third indicator we're going to talk about is stochastics. Okay, as with other oscillators, stochastics identifies oversold and overbought situations, and I'm only going to focus on the oversold situations today. The indicator oscillates between 0 and 100. Below 20 is considered oversold, above 80 is considered overbought, and again, I'm only going to focus on the buying opportunities, or the opportunity or the situations when the stochastics oscillator goes from below 20 to above 20. So let's just look quickly, and as you can see, when the stochastics oscillator goes below 20, this is a rhetorical question, but do we have an opportunity for gains? Do we have an opportunity to make money when the stochastics oscillator goes below 20? Absolutely. But just because stochastics goes below 20 doesn't mean that we're going to run out and buy the stock. Okay? The stochastics oscillator going below 20 is known as the setup. Setup is when you should start getting ready to enter the trade. The trigger, or what's telling you to actually enter the trade, is when stochastics goes from below 20 to above 20. And on May 22nd of 2017, again, don't worry about the time frame. It's just the indicator that I want you guys to understand. Stochastics goes from below 20 to above 20, we buy. And I'll talk about when we look to sell in a little bit. Stochastics goes from below 20 to above 20. Did we have an opportunity for gains there? Stock hits another new high. And believe it or not, you may look at this little pullback here and say, I don't really think that this stock is oversold. Well, you know what? It's hard to determine that just from the naked eye. Good thing we have indicators, right, that help us clear up the muddy waters a little bit and say, you know what, even though you don't think it's oversold, price is oversold. And when the stochastics goes from below 20 to above 20, we buy. Look, this little pullback here, nice strong up move, couple of week pullback. You might be thinking that I don't think that's oversold, but stochastics told us it was. Same thing here, some really nice buying opportunities. Okay. So here, now let's start combining a few of the things that we've learned so far. All right? So let's talk about potentially when to take gains off the table off of these stochastics crossovers. Stochastics, and you looking at this and say, yeah, I could see that being oversold. The stock got crushed here for a while. It made a new high, but got hammered enough where the stochastics oscillator went below 20. All right, so we're not buying yet. We buy it when it goes above 20. So we enter in on February 13th, 2018, when the stochastics oscillator crosses from below 20 to above 20. Okay, and we enter. What I like to do is I like to use the most recent swing high as my initial profit target. As my initial profit target. Not to say that I'm going to exit the entire position when the stock reaches the most recent swing high, but I'm going to take some of the gain off the table, sometimes half of it, and let the other half run. Okay? So what does the stock do? It reaches the most recent swing high, and then it retraces from it, or it pulls back from it. What do we know that's called now? That's a resistance retracement. What did we just learn about what to do if you're in a long position when the price retraces from resistance? We know now that you should sell it, sell half of it, take gain off the table, take some sort of action on your bullish long position when you see price retracing from resistance. All right? And we do that, and then what happens? The stock falls, stochastics goes below 20. Where does the stock stop going down? It stops going down at the same level that it stopped going down here. What do we know that as? We know that's support now. So we're actually combining two indicators or two situations. We are entering a long position when the stochastics oscillator goes from below 20 to above 20. At the same time, what is price doing? It's retracing from support. Look, this trade doesn't work out, or let me say it this way. This trade doesn't move in our direction right away. What does it do? It crashes. See that big red bar there the day or two after we buy it? Crashes. And we say, okay, well, I don't want to stay in this trade too much longer if the stock is going to continue to go down, right? But where did we buy this? We bought it off of a support retracement, right? We bought it off of this floor. What do we know about what to do with a long position if the stock price breaks down through support? We know that we should sell it, right? Well, guess what? It doesn't. It doesn't break down through support. It actually retraces from support again. Okay? So we're saying that we think we're in the clear. All right, we got in here off of this support retracement. Stochastics crossed from below 20 to above 20 and the stock crashed. It settled into support again and then retraced from it, and we think we're in the clear. Then what happens? The stock comes back again to retest support once again now for looks like the third or fourth time. We're saying, okay. And look, during this run here, the stock never reached the most recent swing high, or it never yet approached resistance. So now we're thinking about what are we going to do here as the stock starts to pull back through support, to support, not through support, to support. We know that if the stock continues to fall through support, we'll exit. What does it do? It stops at support, looks on a dime, and then retraces from it. And we could take a sigh of breath now, right? We can take a breath, and the stock rallies, retraces off support, and then where does it stop? Where does it stop? It stops at resistance. Now what do? Well, we see the price approaching resistance and we see it hit resistance, but we don't just sell it because it hits resistance. Why? Because it could break through resistance. We sell it when it retraces from resistance. The stock retraces from resistance, we're out of the trade. Always an opportunity to get back in. What does stochastics do? When was the last time stochastics crossed from below 20 to above 20? Way back here in April. Okay, didn't do so here, it didn't do so here. It gave us another buying opportunity here in July of 2018. So we get back in. Okay? We still have resistance here. And I'm going to be very honest with you. If I would have taken the trade on July of 2018 and I see price hit resistance and then you see that big red bar, I consider that a resistance retracement and I'm out of the trade. Even though the stock stopped going down on a dime there the second I got out and then began to go back up. I'm okay with telling you that I would have exited the position off of this resistance retracement because that's what you're supposed to do. I'm not going to sit here and tell you that I would have stayed in because I would have made more money. Okay? So you exit when stock retraces from resistance, and then what do you see it do? All right, that's fine. You see it break up out through resistance. When a stock breaks through resistance to the upside, that resistance level becomes support. And then what happens? You see price come back to retest that support level and then retrace from it. Comes back to test that support level again. Stochastics then goes below 20, crosses above 20. You got a support retracement, and we're in. We can always get back in. So time and time again. Now this one would have been a losing trade, right? So you got a new high. The channel is broken. Now you're in a nice uptrend, right? That channel that we were in was broken. Resistance was broken. New highs were established. No longer in a channel. Now here we get back into one, right? But here, stock crashes for a little bit. Stochastics goes from below 20 to above 20. We buy it, and then the stock reverses, crosses below or falls below the recent swing low that we entered off of, and we exit. We got to keep a nice tight stop on these things. We don't want to dig ourselves too deep into a hole. All right, so we enter, then stock breaks down quickly, goes below the most recent swing low, and we exit. Always knowing that we're going to get an opportunity to get back in. And there was our opportunity. Time and time again, you're able to always get back in. Here we have not only, so we have one support touch here, we have two touches here, we have a third touch here. Not only do we have a third support touch and ensuing retracement, we have stochastics crossing from below 20 to above 20. And then we're in the trade, and then what happens? Oh boy. It doesn't reach the most recent swing high. It crashes for 2 days and stops right at support. It doesn't break down through support. It stops at support, allowing us to stay in, and then we get a nice support retracement. So this is a rhetorical question. I really believe, because I use these indicators myself, that this information can help you in your trading. Now, the third thing that we have to talk about here is how are we going to search for these trades? You already know how to recognize what the market's doing. It can trend. It can enter into a trader's market where it just moves sideways, channels, and then it can also, the market can also hit extremely oversold or overbought levels. You know how to recognize those markets now. You also know which indicator is ideally suited for each of those markets. Now we have to find the trades, or so this section is called how. How are we going to find our trades? There's three methods. There's one by one. That's where you look at chart after chart after chart, going through I don't know how many to find a handful. A much faster way is to use a scan, a search, that filters through a list of stocks to find stocks that meet certain or specific criteria. Then there's just real-time, intraday, automatic alerts. So the one-by-one method is as such. You, for example, let's say you want to use the S&P 500. S&P 500 stocks. And I want to find stocks in the S&P 500 that today have a, let's say, a bullish stochastics crossover, crossing from below 20 to above 20. And I'm not going to go through this because you can get an idea of how long it would take. You just go through stock after stock after stock. You put the stochastics on the bottom. And you go through and say, you ask, okay, is stochastics today crossing from below 20 to above 20? If the answer is no, you move on to the next stock. And you do that until you find a handful, maybe 5 candidates. I'm going to move us into the VectorVest program, and I'm going to show you the other way. I'm going to show you the alternative, and that's using a scan. Within the VectorVest real-time program, I'm going to go into our Unisearch tool. And within the real-time program, we have a tool called ProTrader. ProTrader is a technical analysis scanning tool. It scans for things like moving average crossovers. All 4 of the support and resistance situations that I just taught you. Breaking support, breaking resistance, retracing support, retracing resistance, MACD crossovers. And then it has a search to find stocks whose stochastics is crossing above 20. And if I just wanted to run that search right now, actually, I'm sorry. This search right below it, guys, is just a little search that I modified. I modified stochastics crossing above 20, and I only want to look at S&P 500 stocks. So if I run that search, let's see how many stocks we'll find. We find a good deal of them. Actually, no, I'm sorry. We only found 1, 2, 3, 4, 5, 6, 7, 8, 9. Out of the 500 stocks in the S&P 500, only these 9 today, as of right now, have a stochastics crossing above 20. Think about how long it would have taken you to look at all 500 S&P stocks to find these 9. a lot longer than what it just did for me to run the search. Okay? And again, if I wanted to find stocks whose MACD crossovers, MACD is crossing bullish today. Now, I wouldn't do that, by the way, because the market's down. Okay, I wouldn't do that today because the market's down. We're going to look at the market first. What would I do today? Well, let's look at the market. What type of market are we in, folks? Right now, are we in a trending market? Are we in a trader's market? Or are we in a market that's hitting an extremely oversold level? And I'll put the MTI and the buy to sell ratio on. Is the MTI below 0.6? No. Is the buy to sell ratio below 0.2? No. So we know we're not in an extreme oversold market. We're not in a trending market. You guys are right on. We're in a trader's market. We're in a market that just recently, now we're kind of right in the middle. Let me show you something. We're kind of in the middle of support and resistance, right? I'm just going to draw. Here's resistance. Here's support. We're just recently retracing from resistance. We're kind of middling now, right? In the middle between support and resistance. We're not at support yet, so I wouldn't consider buying anything. What I would consider doing is shorting stocks right now or not buying anything. If you don't short, don't worry. I'm not saying that that's what you have to do. You either look for short stock positions right now or do nothing and wait for the market to hit this support level and then retrace from it, and then you start buying stocks again. Okay, so just going back to our slides here. Here are here's just some images of our Pro Trader tool, where it looks for all of the three situations, each of the three situations that I laid out earlier: MACD, support and resistance, and stochastics. The third method is automatic alerts. Intraday real-time automatic alerts. And a tool we have within the real-time program is called the Watchdog. It continuously runs the scan for you during the day. Okay? And will alert you in real time, either via text message or email, when a stock meets the criteria that you've entered into. So I have a few watchdogs running all the time. I look for MACD, just for example, for this purposes of this demonstration, we're looking at a bullish MACD crossover on the S&P 500. Okay? Bullish MACD crossover on the S&P 500. And at 8 a.m., now before the market even opened, and that's the beauty of the real-time program because you're able to see pre-market activity. Right at 8 a.m., PRGO met the criteria of a MACD crossover within the S&P 500, and it even gives us a price, $46.78. And there's your crossover. There's your MACD crossover. At 8:59 on the same day, September 3rd, ALK, I think that's Alaska Air, met the criteria of a MACD crossover in the S&P 500. And there it is. MACD histogram bars were negative for quite some time and then eventually turned positive, but you got that alert during the day, folks. You don't have to run a search. You don't even have to be in front of your computer to get those watchdog alerts. And you can look for not only MACD crossing over bullish or bearish, but you can look for support and resistance as well. Okay? So I'm going to venture a few guesses as to why you showed up today. You showed up today because you feel like maybe you're missing out on the current market. The trading plan that you've used successfully in the past isn't performing like it used to. And you just want a better, faster way to find your trades. And you guys told me that. You told me earlier, and let's see if I can go back up and see it. Yeah, a few of you guys saying that there are too many indicators. Bruce said narrow down all of the choices. Okay, so that's what you came here for. You wanna find your trades faster. You want to be able to recognize what the market's doing. You want to use the appropriate indicator and not just say I'm going to use the MACD because I know the MACD, right? The MACD is not going to work in a trader's market. So what we learned today is to make sure to match the market to your indicator. Let me reverse that. And I should have reversed it on the slide. You want to match the indicator to the market. Match the indicator to the market because the market is what you're looking at first. You're not looking at the indicator and then saying, you know, what kind of market am I in, right? You're going to look at the market first and you're saying, okay, I know what the market's doing. What's the best indicator to use in that type of market? You learned how to effectively use only 3 popular technical indicators. I didn't show you a dozen. One of the things that people or traders get frustrated with are that there are so many. And then third, you learned how to quickly and easily find trading opportunities. Look, you can do it the one-by-one method, you know, where you look at stock after stock after stock. You can do it that way. It's not very time effective. All right. Using a tool like the Pro Trader and the Watchdog, it just saves you a heck of a lot of time. And that brings me to our big lesson of the day. Technical analysis can help anticipate, there's that word again, anticipate future direction, and you can find great trading opportunities, especially if you use the power of speed. And again, the word there is anticipate. Remember when we looked at the MACD crossovers, right? Why do we enter in on a bullish MACD crossover? Why do we have confidence that we're likely going to have a successful trade on our hands if we're applying the MACD to an uptrending market, in an uptrending market to an uptrending stock? Why do we have confidence? Because of what the indicator has done in the past, right? We're anticipating that we're going to make money on this trade because of all of the other successful bullish MACD crossovers that have occurred in the past. Okay? So you might be asking, all right, this is some pretty good stuff here. How can I get started using these indicators, you know, with this approach right now? Well, you have a choice. You can do it the fast way, you can do it the slow way. The slow way, guys, is possible. You do it one by one. One by one, you go through stock after stock, or you can do it the fast way. As a recap, let me show you what's included here in what we've talked about and what's included in our VectorVest real-time program. You get fundamental and technical charting. You get market timing signals for clear entries. You get those Pro Trader searches, right? Those technical scans. You get the Watchdog, which gives you instant real-time alerts. You get the Genius, which is an automated portfolio manager with alerts. You get pre-built trading systems, and of course, you get real-time streaming data. Now, normally, if you wanted to buy this on its own, we would sell it to you for $137 per month, even though all of this is worth way more than $137 a month. We'll sell it to you for $137 a month, but we want to give you a chance to try it out first. So here's the offer for you guys only. For being on this webinar, I just want to thank everybody for being here today. It's 2 o'clock on a Friday. Just want to thank you guys for being here. Special webinar rate only of $9.95, and you get to try the real-time program for 30 days. I'm pretty sure Ray has already done this. He has. Thank you, Ray. He has typed in that address that you see at the bottom there, guys, in the chat box. www.vectorvest.com/capture-trades. Now, here's a bonus. Okay, to help make a decision even easier, I've included this next bonus. I'm going to give you a stock buying checklist. It's a trading plan checklist. This is great for those of you who like to be more hands-on with your trades. The checklist will help you make sure that each trade you place follows all the rules that we discussed today. Okay? Now, also, to help you make the decision even easier, you probably won't need this, but this is completely guaranteed. If after the 30 days you say, you know what, this isn't helping me, I want my $9.95 back, we'll give you the $9.95 back. Okay? Raj, good question. Raj is asking, what's the price after the special? This trial, this 30-day trial to the VectorVest real-time program, which includes everything that I talked about earlier, will convert automatically into a monthly subscription for that $137 per month, Raj. Now, listen, if by the end of the 30 days you say, nah, you know what, I don't want it anymore, number one, we'll give you the $9.95 back. If you say, you know what, I really like this, but I don't want to pay $137 a month, do you have an annual offer? We do. You just have to let us know if that's what you want to do right before the 30 days is up. Okay? So again, guys, $9.95 for 30 days. What I'm going to do now is, nobody reminded me, I'm going to put today's slides in the handout section of your GoToMeeting control panel. I promised I'd do that for you right at about 3 o'clock, and that's what I'm going to do. And you should see it now. It's a PDF. It says 3 techniques. Raj says, get similar offer for end-of-day data? I believe so. I believe, yes, you can get a $9.95 trial for end-of-day data, but it doesn't include ProTrader, the Watchdog, real-time streaming data. So the end-of-day program, Raj, does not include all of those add-ons. Okay. Somebody's asking, on the webinar, the monthly cost for the premium cost is $129 a month. Yes, $129 a month plus $8, an $8 real-time data fee. So that comes to $137 per month. $129 for the base real-time subscription plus an $8 a month real-time data fee. Okay, good. All right, Paul says, what about us who are on a monthly end-of-day sub? Okay, great. Sign up for the trial, Paul. Now, your monthly end-of-day sub won't go away. You get to try real-time for 30 days for $9.95. If at the end of the 30 days you say, I want to go back to my end-of-day, fine. Well, you don't go back to it. It never went anywhere. You just continue with your end-of-day monthly sub. If you say, you know what, I like the real-time program plus all the bells and whistles better, your end-of-day subscription will go away after the trial, after this trial, and then you'll have our real-time program. Aaron, we don't have Williams %R in our database. We have RSI. We don't track Williams %R. Okay, quick answer there. All right, guys. Any other questions before we wrap things up? I want you guys to get this special offer. Now, this offer is good until Tuesday at 10 a.m. Eastern Time. Tuesday at 10 a.m. Roger's saying, is there a long-term end of day with all the bells and whistles after 1 month? No. End of day, no. So end of day doesn't come with all the bells and whistles. Real time does. You can purchase all of those other modules, guys. You can purchase ProTrader. You can't even, the Watchdog isn't even available with the end of day program because it's a real time alerting tool. But you can purchase ProTrader if you wanted to stay with the end of day subscription. But the real time subscription comes with more bells and whistles. You're welcome, Kevin. I appreciate that. Yes, so Judy's asking, any getting started classes? Absolutely, absolutely. Our support department will talk you guys through all of that, all of the training that we have available. You'll also, once you sign up for the trial, you'll get a getting started, Judy, training session with one of our consultants right away. And we do free weekly webinars throughout the week all the time. Oh, Antonio, fantastic. Antonio says, thanks, I already have real time. Good. Oh, if you have it, you probably like it. I'm sure you do, Antonio. Let's see. www.vectorvest.com/capture trades. I will try the special for the 30 days. Fantastic. And I don't know what the name is there. All I see is an email address. John says I have real time as well. Good. Good. John says still learning. Well, I'm sure you are. Look, I want to give you guys my email address. Nancy says I will give it a try. Fantastic, Nancy. My email address, guys, is Jerry D. That's Jerry, D as in David, at VectorVest.com. If you already have real time, or if you sign up for this real time trial, shoot me an email if you have any questions. If it's something that you feel needs an extensive walkthrough, call our support department. But if it's a quick question about something, just shoot me an email at Jerry D, Jerry, D as in David, at VectorVest.com. Okay. If you guys aren't on the real-time program already, if you're joining us via YouTube, this is a no-brainer. I'm not here to tell you how to spend your money, but it's $9.95 for 30 days. If you're looking to better yourselves as traders, have a little assistance here in the stock market, we're here to do that for you. So it's really a no-brainer for $10 for 30 days. Just remember, at the end of the 30 days, if you don't wish to continue, give us a call because it will automatically convert. I want to be upfront there. I'm not going to not say that and have it automatically convert and be a surprise to you. It will automatically convert to a monthly subscription. I believe it's Tuesday the 1st. The offer is good until Tuesday the 1st, I believe, Raj. Okay, so if you're watching this via recording, if you're not on the session live today, if you're watching it over the weekend via recording, you still have an opportunity. Go to that website. You don't even have to call us, guys. If you're watching this recording, you don't have to give us a call to sign up for this trial. You just go right to the website that you see at the bottom of the screen, VectorVest.com/capture-trades. Again, folks, my email address is jerryd@vectorvest.com. It's been my pleasure. Again, shoot me an email if you have any questions about the real-time program. I'd love to work with you moving forward. So have a great weekend, guys. It's Friday. Thank you, Long. I appreciate that. Enjoy your weekend. Stay safe, and we'll see everybody soon. Have a great day, folks.